Hello, everyone. I know I'm jumping this one in right towards the end here, but hopefully some of you will take a look at it. I'm going to talk today about equity ratio and return on equity as the final project for our business finance class here. So these two ratios I want to talk about, starting with equity ratio. So the equity ratio measures the company's assets. It looks at if the company is financed by shareholders' equity or by debt. And the ratio itself is the total equity of the company divided by total assets. So a high ratio means that the company is managing things conservatively, and they have their own equity to back up their assets. So they're making purchases from what they've got already in hand, as opposed to being more leveraged with low ratio below 5.5. That means that they have to borrow money to get their assets that they then use. So we look at this to assess the long-term solvency of a company. How stable is it? What is their risk exposure? Are they going to run out of money and have to borrow more money? And that adds costs. So we're looking at the capital structural strategy of the business and really its stability. Like how long is it going to stick around? These are important things to evaluate. The return on equity, or ROE, is similar, but it's all about how that equity is used. So are we going to be financing with the shareholders' equity or with debt? And then what do we do with it? How well are we doing with it? So this ratio is calculated by net income divided by the shareholders' equity. A high ROE means efficient management and high profitability. Low ROE means poor earnings and inefficiencies in the management. So we want to look at this to see what is our profit for every dollar we invest. How well are we doing with that money? Assess the management of the company. Compare efficiency between companies, or if you have granularity in your reporting, compare between departments. So that's a valuable tool. Now, why would we use these two together? We use them together because one shows the capital structure and the other shows the profit levels from that capital. So they work really hand in hand. And to break it down, looking at a company with a high equity ratio and a high ROE as well means that it's stable and profitable. High equity but low ROE means the company is stable but not all that profitable. They're really not doing well, but they're going to be at it for a long time. So there's something to be said for that. But a low equity and a high ROE means that the company is risky, but it's efficient. So it's turning a lot of profits from the assets, but might not by doing that forever. So that's something to think about. So I pulled this real world example from some of the stuff that we did in the past. I went a little crazy with the ratio comparison chart earlier in the course, and got down the chart quite a ways, looking at a comparison between some companies that are really important in the tech space, especially with all this AI stuff out there in the world. And so we pulled these numbers from 2024 SEC filings and kind of just broke everything down. When we get to the equity ratio, we can see that all three companies, AMD, Intel, and NVIDIA, are all doing quite well in that regard. They're all over 5. Obviously, NVIDIA is doing better, but AMD actually wins in this regard. They win in a few columns, and this would be one of them. But you got to look at the next one in the line, which is the return on equity, and NVIDIA is just crushing it. They're just blowing everyone out of the water at over 56%, whereas the ROE is actually quite low for AMD and Intel. So they're stable companies, like we talked about in the last slide. They're stable companies, but they're not all that profitable. So probably going to be around a long time still, but not impressing anybody with this particular metric. If you look at the benchmark, what do people do, or what are companies doing in the S&P 500? It's a little over 20% is the benchmark. So NVIDIA is doing almost 3 times that, while AMD and Intel are lagging quite far behind. So that's my breakdown. Thank you everyone for watching, and hope you all had a good quarter as well. See you next quarter. Thanks.